Tesla's Robotaxi trillion-dollar business. February 26, 2022. This is a changing world. Thanks to advanced technologies and new innovations being delivered faster than ever before, but there's one change that could be here sooner than you think, and that is autonomous vehicles, which could be one of the most meaningful innovations of all time. And Tesla is in the best position to take majority share. Imagine giving every person who commutes an hour back each and every day. What a gift when you can never get back your time after each day. Why is Tesla one of the only companies really tackling this challenge? The latest research on the autonomous vehicle market. If you're interested in Tesla's progress. Let's see what Tasha Keeney, an ARK Invest analyst, has to say. Autonomous cars could be very inexpensive to consumers, and that autonomous taxis and ride-hailing systems could dominate urban transport, and ultimately we think this could be one of those most meaningful economic productivity-delivering innovations of all time. The GDP contribution from autonomous ride-hail systems could total around $26 trillion by 2030. We expect the price per mile that you could profitably charge a consumer could be about 25 cents per mile, well below the price of point-to-point mobility. Which really hasn't changed since the Ford Model T rolled off the first assembly line, thanks to higher utilization rates that cost could be as low as 25 cents per mile. Of course, there'll be a lot of benefits to autonomous cars. We think they'll be a lot safer and they'll be extremely convenient. But what do we think will drive demand that is this price? Autonomous ride-hail should attract not only people that are in the ride-hailing market today, but also car owners, and consumers value their time at about 60 cents to $1.10 per mile on average. Time spent on commuting to work-related travel. The low end of that is time spent on errands or personal travel, but today consumers pay about $2 per mile on average for ride-hailing in Western markets. That's about the average price of an Uber today, so they're already paying up for this additional convenience of ride-hail. Notably, this is also much higher than the marginal cost to drive. The cost of gas, insurance, all the costs that you pay in a day-to-day or on an annual basis. There's a lot more that Tasha Keeney has to say here. But I'm excited for autonomous ride-hailing and eventual air autonomous ride-hailing. Most exciting is that the costs are going to come down so much. Once autonomous ride-hailing is proven to be safe, I think we'll see a lot of people start using it. And Tesla is in the pole position to take most of this market. Source reposted and summarized from Jeremy Johnson at Talk News. My take: once FSD is solved, everything will change. Tesla is the only company in the race to solve it. Other companies' efforts are laughable at best. Tesla to release FSD Beta in Canada this weekend. February 26, 2022. With just 3 days left in the month, Tesla owners in Canada were starting to think Elon Musk wasn't going to be able to deliver full self-driving beta in February as promised. However, there is a chance it will happen before the calendar rolls over into March. Responding to a tweet from Drive Tesla this morning, Musk said he is hoping to release FSD Beta north of the border this weekend. The one remaining question is how Tesla is going to determine who gets the software. Musk has previously said it will be a cautious rollout. So the first batch of cars to receive it will likely be a relatively small number. Although he has yet to confirm it. Musk's tweet also suggests FSD Beta will be deployed in Canada without the use of the safety score. When Tesla widened the group of testers in the US last year, owners had to drive for 7 days and achieve a perfect 100 safety score before being allowed to download the software. The tweet also confirms our earlier reporting that Tesla has been testing FSD Beta in Canada internally with employees. Musk said there are about 60 or so cars with the software. But according to Transport Canada, the actual number is 68. Just one away from one of his favorite numbers. Source reposted and summarized from Darren John at Drive Tesla Canada. My take: I hope I have a chance to try it out in one of the early beta groups. Tesla removes radar from Model S and Model X. February 26, 2022. Tesla has announced that it will transition the Model S sedan and Model X SUV to pure vision, officially committing to a camera-based approach for its autopilot and full self-driving suites. In May 2021, Tesla announced that all Model 3 and Model Y vehicles delivered from that month on would no longer equip radar. Instead, the vehicles would utilize Tesla's pure vision approach, which only uses its 8 external cameras to perform semi-autonomous driving functions. Starting with deliveries in May 2021, Model 3 and Model Y vehicles built for the North American market will be optimized for Tesla Vision and will not be equipped with radar. If you ordered a car before May and will receive a car that is not equipped with radar, you will be notified of the change in your Tesla account prior to delivery. The automaker said in a blog post last year. Tesla officially announced on its transitioning to Tesla Vision webpage last night that all Model S and Model X vehicles built from mid-February on would only equip Pure Vision, and no longer would utilize any radar to perform its functionalities. As of mid-February 2022, all Model S and Model X built for the North American market utilize Tesla Vision. All Model S and Model X built for the North American market prior are equipped with radar. Tesla said, "When your vision works, it works better than the best human because it's like having 8 cameras. It's like having eyes in the back of your head, beside your head, and has 3 eyes of different focal distances looking forward. This is, and processing it at a speed that is superhuman. There's no question in my mind that with a pure vision solution, we can make a car that is dramatically safer than the average person," Musk said. Source reposted and summarized from Joey Klender at Tesla RT. "My take: this move worries me a bit. I assume Elon know a lot more about it than I do." Production expansion for Tesla. February 26, 2022. Tesla's plans to expand its production capacity, along with other factors like surging oil prices that could sway consumers to electric vehicles, have contributed to Daiwa Securities analysts upgrading their outlook on the automaker's stock. Daiwa analyst Jairam Nathan said Tesla is best positioned to satisfy the increases in electric vehicle demand due to its manufacturing expansion plans, which are set to drastically increase the automaker's annual production capacity. Tesla plans to increase Gigafactory Shanghai's production output with a new facility, according to reports this week. Additionally, Gigafactory Texas and Gigafactory Berlin are nearing the final approvals in their respective jurisdictions. Tesla is awaiting an EPA certification of the Austin-made Model Y in Texas. In Germany, the company's factory is working its way through the lengthy and confusing bureaucratic process. Tesla's operation in China seems to be where Nathan and other analysts are most bullish regarding the company's forecast and outlook. The factory in Shanghai manufactured 51.7% of the company's total deliveries in 2021. Despite only offering 2 vehicle models, Tesla has established the Chinese factory as an export hub for European customers while Gigafactory Berlin awaits final approval. The current situation in Ukraine also could have some effect on EV adoption in Europe, especially as crude oil prices were trading above $100 a barrel for the first time in nearly 8 years yesterday. According to MarketWatch, increased gas prices due to the conflict could lead consumers to sway toward EVs. The note from Daiwa also said that decreased profit contribution from automakers' combustion engine sales could ultimately slow the adoption of EVs from manufacturers attempting to transition to electric powertrains, with Tesla expanding manufacturing and other automakers uncertain of the consumer climate for gas cars moving forward. The situation warranted an upgrade on Tesla stock. Source reposted and summarized from Joey Klender at Tesla RT. "My take: I look forward to the day when ICE cars are finished.